let's go back and talk a little bit more about Lyft here, which we are seeing take off after coming out. Revenue surprise, 23% rise. They are on the path to profitability, they say. I want to bring in Wedbush's Dan Ives on Lyft. So Dan, we thought, hey, we had the Uber news out on all their layoffs. We've seen what Lyft is doing. We just thought this company was not going to be able to deliver. What happened here? Why is this actually looking a little bit better than expected?
Yeah, look, this is viewed as showing Armageddon-like numbers coming in, just given what we're seeing with the pandemic. And also remember, they're domestic and they don't have an Eats business like Uber. I'd call this much better than feared. And no doubt the devil's going to be in details in terms of for 2Q and for the rest of the year, but especially the path to profitability. They're going to rationalize their business model. We saw that from Uber as well today. That's the key for the street. You put this together, and this stock that probably has a 3 in front of it going into tomorrow, depending on how the conference call goes. But I view this a bright spot in a dark environment.
So is it good or bad not to have a Uber Eats problem? Because there's really two camps out there. Sometimes, look, Miles just did the Grubhub numbers. If people start to get into the habit and maybe we see more delivery happening, is that a way to leverage your drivers? Is that a way to make yourself more relevant in this time? Or do you see it just as a negative?
Well, pre-COVID, it was an overhang in the stock because of take rates, profitability. They're going to have to further rationalize that business in terms of Uber. Now you look at Uber Eats. That's really a savior in terms of the business, just from an overall food delivery. Look, rideshare, and just put some numbers around them. We think about 30% of ridership from the gig economy goes away for the next 1 to 2 years, and about half that might go away forever. So you're looking at new business models on the other side of this dark valley, and that's what Lyft needs to get investors comfort with what the goalposts look like, and that's going to be key on the conference call.
Overall, look, we have a number of companies out this afternoon, and we're in earnings season. How are you feeling about the visibility that we're getting from companies in your coverage space, the guidance? Has it been enough? Has it been revealing to an extent that you're satisfied with?
Yeah, it's a great question because no one knows the next 10 minutes, let alone the next 3 months. But I think on the enterprise side, in terms of technology, you've definitely seen a bit more visibility and strength, especially on the cloud side. Microsoft, obviously large cap, but really across that and cybersecurity. And I think overall, even on some of the consumer names, investors are looking past June to a more normalized, we'll call it a new normal, September, December, and fiscal 21 numbers. The one thing I'd say is that these management teams are rationalizing costs for what I would view as more stress-tested models. That's what the street likes to see because cash flow and profitability at least feel a little more resistant here.
Hey, Andy Server, you want to jump in? Did you have a question for Dan?
Yeah, I want to ask, I don't know, Dan, are you comfortable talking about Grubhub at all?
Yeah, especially on the food delivery, of course.
Yeah, and that's what I wanted to get at, because, this company is a lifeline for restaurants right now. On the other hand, it's got to toe this line, right? And there's complaints out there from restaurants, moves in Boston and Chicago about capping their fees. So this is a little tricky for them. In other words, this is a gold mine potentially, but they can't look too greedy, and balancing must be tough, right?
Yeah, it's a quagmire, and it's a huge balancing act for them because you look at it, you look at all the pressure restaurants are under, and from a cap perspective, from a take rate, can they do that, and can it also be profitable? Because then you look at competition that comes in, that potentially could be a headwind for them. So it's a huge balancing act, especially just given the pandemic and what we're seeing is this being the artery for most consumers in terms of getting food delivery and even groceries.
Dan Ives, before we let you go, earnings season is not over. What is the most important report that you have on your radar right now?
Look, I think the most important report, out there continues to be when we look out to the next week or two, when we look at Cisco, that's sort of a missing link in terms on the networking. So we've seen cloud, we've seen enterprise. We need to see that, especially some international strength. That's going to be key. And also, I think Uber tomorrow. Uber's a bellwether on gig economy. We got to sort of see the goalpost. Lyft is only one piece of the puzzle.
So for Uber tomorrow, just setting the table for that. I mean, look, we just had the layoff news. We've seen what Dara is doing with his own salary for going that through the end of the year. It's, it is tough times over there. What are the metrics that we really need to keep an eye on?
Well, especially what we saw in Lyft, we need to see what ridership looks like, especially international. What the Uber Eats business looks like from a profitability, take rates, and also is it helping neutralize some of the weakness? And a lot of it comes down to the cost structure. I mean, that's going to be a big focus on Lyft as well. What profitability looks like, the path, can they navigate this category 5 storm, and what the business model looks like on the other side of the dark valley.
All right. Hopefully we'll all get to the other side of the dark valley. We'll be talking to you as we get through it. Wedbush, Dan Ives helping us sort through some of the earnings action here after the bell. Great to talk with you.